Our second chart of the day is with one of the largest GPS manufacturers in the world, Garmin. And what I've done here is taking you all the way back to 2008 in the glory days of Garmin, when they were upwards of $100 in share price. And as you can see from the price chart, I mean, this thing plummeted all the way down to $15 in December of 08 and January of 09. So you can see by that yellow trend line on the price chart how steep the fall was. Now when we look down at the rate of change, you see that there is a yellow box, and you notice that the box highlights what's below the zero line. So when the price is below the zero line, that means it's a much stronger negative rate of change. And over the entire course of this year, you can see how much time that this chart spent below the zero line, which not surprisingly corresponds to this steep decline in the price of Garmin, almost a 90% decline. So again, this can be used to confirm long-term trends, and when you're investing in a stock, it's easily apparent from looking at this Garmin example that you definitely want the rate of change to be above the zero line and be above it more often than not. Now to contrast the Garmin example, which went down essentially 90% in overall value, we contrast this with Toro, which is one of the premier manufacturers of durable goods, lawnmowers, snowblowers, and pretty much any serious piece of golf care equipment that you will see on a golf course. So over here, as in the last chart, I've drawn a trend line, and it moves from about $48 all the way up to $65 currently today. Unsurprisingly, if we look at the rate of change of the price, we see in this yellow box that the price, this price rate of change for Toro has spent much of its time above the zero line, which of course corresponds to the significant rise in price. Remember that the further that the line is above zero on the rate of change chart, that means it's a stronger price movement. The closer it is to zero, that means it's a less powerful price movement. But the main thing to remember is above zero is a positive rate of change, below zero is a negative rate of change. And clearly we can see here that Toro has made a very steady gain from 48 to 64, and that most of this time the price rate of change has been above the zero line. On we move to our final chart of the day, and we are looking at the stock Kimberly-Clark. And what we all should see on the screen is the price chart on the top, the rate of change chart on the bottom, and two trend lines drawn, one on the price, one on the rate of change. And even more important to discern from the charts is that these two lines are moving in opposite directions. The theory goes that once the rate of change has these declining peaks, as clearly evidenced by the trend line, that means momentum has essentially stopped in that direction, and that it's not uncommon to see a steep drop in price, which, if we look at the price chart, clearly happens pretty dramatically from about $66 to $62 in a single day, and then falling further all the way to $61. And again, we see that there are three peaks on the price chart increasing, but at the same time the rate of change continues downwards. In other words, as the price kept climbing, the rate at which the price was climbing kept decreasing, and then eventually hit a wall, and all the momentum was sapped out of it, and we moved into a downward trend, which we can even see on the rate of change chart as well. So again, look for divergence, as it could signal a steep fall. As we promised with all of our presentations, we like to leave you with a few helpful tips to kind of summarize everything that you've just learned for the day. So the first thing is that the rate of change is a chart that's used to determine the strength of the current price trend direction. Just because the price is going up, if it keeps going up by smaller increments, it means that the rate of change, the momentum of that movement, is losing strength and weakness, which means it could signal a reverse. The other thing to be aware of is that this chart, this rate of change, can be smoothed out depending on the time period that's used. The shorter the time period, and one that's typically used is a 10-day or 12-day time period, we'll see lots of ups and downs, as we just showed you today. But if we use a longer time period, let's say 50 days, the line will be much more smooth and probably clearly outline a more direct response if the price is going upwards over the long term or downwards over the long term. Third, look for divergence. Just as in the last chart about Kimberly-Clark, the price was going up, had 3 distinct peaks, but the rate of change showed that those peaks each was losing power as it went up, and again it hit the wall. Look for divergence. It could save you and make you a lot of money. And fourth, look above and below the line. If the rate of change is always below the line, that means the price is decreasing, and it can be decreasing at differing strengths at any time. And the same goes for above the line. Even if it's above the line by just 0.1, that still means the price is going up on the stock. It's just not very quickly. So again, look above and below the line to see if there's a positive or negative trend. Look for divergence, and remember to always be pretty steadfast in the way you determine the strength of the current price trend. And that brings our presentation for today about the rate of change to a close. And stay tuned for future sessions on how to use this in tandem with other strategies, such as the relative strength index and a momentum indicator. And with that, from Penny Stock Analysis and PennyStockAnalysis.com, invest wisely.